Maybe your satellite didn't turn.
Yeah, I didn't follow that bloody satellite, yeah.
Hey guys, welcome to the Wealth Project. I'm Jordan, Morgan, and Sam is also in the call. Today we're going to be discussing Rolls Royce. We've made a video about Rolls Royce before. I think you guys might know a little bit about it. It's one of our more popular videos. So we're looking at it basically as a recovery stock from the COVID crisis. And today we're basically just going to go over the recent price action. A lot has actually happened. They've closed a few deals. And there's some bits of positive news about the travel restrictions and just the overall industry is coming back. So I think it'd just be a good opportunity for us to discuss our opinions on the matter and where we think Rolls Royce is going to go. So what do you guys think?
Yeah, you said they freed up some cash. And obviously, Rolls Royce, as well as many companies, has obviously been quite hit hard over the COVID period. And their balance sheet wasn't great. But one of the sales was its Spanish business. I think it was ITP Aero.
Yep.
And that essentially, I think, raised about 1.7 billion. So that transaction has basically been described as a key element for its firm's disposal plan to help rebuild the balance sheet. And that also allows them to borrow more money. So with COVID supposedly ending, as we said in the previous video, obviously, things they're already in, supplying engines to Boeing and so on, that's going to obviously increase their revenue. So I think Sam's seems to have disappeared. But we'll just carry on how it goes. Obviously the big one, which is obviously they won that 17-year contract, which is obviously something we've been speaking about.
Yeah,
and,
huge.
That's going to be a monster, really, and that's worth, I think, about 500 million. And obviously, that guarantees future business, which obviously means that steady inflow of cash, which is exactly what Rolls Royce needs to help that balance sheet increase.
Yeah, can you guys see me or hear me? I was going to say, I didn't think I went good. So obviously we've seen their share price almost double from their previous low. So they were all the way down at 71. Is what their share price hit at one point, and they're now at 135. So catalysts like the sale of the business, although the news will see it as pretty negative. That's it.
Like a sign of weakness.
With that comes job losses, comes they're struggling, they need the cash. But as an investor, you go, actually, they've raised a lot of funds. They're for an investor, then they're safer than for us because they have got a lot more cash in the bank than they previously had. And like Morgan said, they benefit from the rebound of coronavirus as much as anyone, like the airlines, etc. Will just have a big knock-on effect on Rolls Royce. And I think that's what we've seen so far. The airlines in particular seem to be a catalyst, so you can pretty much follow similar trends on EasyJet and Ryanair and see when obviously the news has been announced in the UK about restrictions lifting. You can pretty much trace that back to the Rolls Royce share price increasing.
Yeah, and I saw that big dip that they had down to 74. I think it even went down to 40. During that time, I'm pretty sure they were trying to raise cash by increasing the amount of shares outstanding. They were trying to dilute their shares. So that was, I guess, the first thing, because I was a bit curious at first why they went from 300 all the way down instantly, but it had something to do with it as well.
I'm sure they stopped their dividend as well.
They did, that was a big one too.
There's a few things that investors weren't very happy
Rolls
about.
Royce used to be quite a popular one for pensions. It's seen as quite safe. Same with like BT, etc. You often see they are a favourite of pensions and things, but obviously as soon as you're not paying out dividends, then that becomes less attractive and less you are holding. But a lot of people who buy, they often buy what's called as drip shares, which are dividends reinvested in your pension. So every time you get a dividend, it rebuys into Rolls Royce, and it basically just keeps accumulating. But obviously, if you all the pension plans which have that in, which are loads of them nationally and internationally, to be fair, will have probably pulled the plug or moved elsewhere as soon as Rolls Royce became less attractive. They seem to have a lot of traction regarding their nuclear work. Actually, they're being urged to carry out a lot of nuclear power testing. Yeah, so
that's pretty cool.
I think that will be a big play for them to try and find a more renewable way. Obviously, nuclear energy generates so much power, but it's always been the safety issue of it. So if Rolls Royce were to then somehow be able to reduce that risk or control that risk, then it's likely they could be a huge energy powerhouse in years to come and be the same as we've seen like BT, etc. But it will be a long time before they're back up at their previous highs of sort of 900, 1,000 plus. But it's a good time to get in still at the moment for the long-term plan.
Yeah, I mean, they're in so many sectors. I was having a look at the analyst reports on it, and from what their prices, I think this was done about a week ago, they said 3 buy recommendations, 7 hold, and 2 sell, which I think it is at that hold price at the moment. Obviously, we've got in, is it early? I think it was about 91, 92.
Yeah, 91.
And at
well
that
sub
time,
of 100.
Yeah, but that's it. And at that time, obviously, the buy recommendations were a lot higher than that. So it's currently at that hold price and sort of waiting to break 200. But
yeah.
I think the 2 factors is obviously that balance sheet improving, and obviously the COVID. With it slowly lifting up, I think the balance sheet's going to turn.
That's it.
Yeah, we're seeing more longer haul flights opening up to from November 1st, you can fly into Australia, which is a big, long route. That's like, even from London straight to Perth, we're talking, I don't know, 18, 19 hours straight. That's a pretty promising amount of flight hours, just opening up that half of the world.
It's a good one to play for. Obviously, we're sort of rebounding on, in terms of vaccines, and the economy is rebounding quite well, as opposed to America, where we're obviously debating whether there's going to be a big crash. Rolls Royce has probably benefited a lot better than some of their US counterparts on that front, just because the US flights just weren't flying. You couldn't get into the US. US obviously they have the domestic flights, but still they're not as much obviously compared to the international flights which Boeing and Rolls Royce operate on, with the likes of Boeing, Airbus, etc.
Yeah, and I guess they bill their customers based on the hours that they fly. So it's kind of like a maintenance contract based on how much you use the engine. So for them, getting as many planes as possible into the sky is going to be like the number one priority. And that's going to, I think, be the thing. Like once there's actual capacity in the air, once there's, people flying again, that's going to be the time when this stock is going to be that one where you're like, damn, I wish I bought in.
Yeah.
They reckon the full capacity won't be until 2024.
The catalyst, which
I can definitely see this next year
at the moment,
with the airlines and everything,
air travel. And I must admit, Rolls Royce publishers or PR team have been pretty brilliant about getting it all positive news about Rolls Royce, what they're doing, who they're partnering with. There's rumours about this and that, which has made it a lot more attractive as an investor. I certainly think that's what we're going to be looking for as a team. Keep your eye on that. I think certainly I think it will gradually increase up till December. It will probably go a little bit red.
I mean, it has been recently, right? It's going a bit red at the moment.
Yeah, so today it took a bit of a hit, but it's been going up for a few weeks now, so it had to stabilize a little bit. But we're very much playing this as a long haul play, so it doesn't fuss us much. Obviously, George's in at 91. I think I was in at 85 at one point, but I've been sort of buying, selling, rebuying, selling, rebuying. So we've seen sort of the way it operates over the past few months. And it has been one of the best sort of rebound plays purely because how hard it was hit.
Yeah, and it didn't seem to get too much attention either. It was weird. There were stocks like EasyJet and all these other ones that were going crazy, whereas Rolls Royce was just sitting there like it's just under the radar completely.
Yeah.
So I just saw it as like a missed opportunity for a lot of people. I'm thinking, I mean, it's a big company. These guys are protected almost by the government. So why wouldn't you give it a shot?
I mean, it's got a big manufacturing department. They were able to carry on, so that didn't make too much of a difference in COVID, but it kept the company going. It was odd to see that once EasyJet, like you said, got going, they didn't follow suit originally. And like the likes of BMW and things like that, when they opened up all the showrooms, it wasn't the same either. Which is bizarre, but nice of you to join us, Morgan.
I tell you, forget Rolls Royce. I invested in that Starlink, and it's just I don't know what's happening.
Maybe a satellite didn't turn.
Yeah, I didn't follow that bloody satellite. Yeah,
probably have to upgrade Elon Musk just so he can.
Yeah, I know.
Anyway, yeah, we're just talking about how Rolls Royce kind of flew under the radar with all the recovery stocks.
Yeah,
so there were a lot of them like Carnival, EasyJet, and so on. That really rebounded quite strongly, and then Rolls Royce was just like,
Well, they're in so many industries. I mean, I don't think cruises have had a full rebound yet, but I know friends that are starting to book cruises now. So yeah, I think the end of this year, I think we're going to see a nice tech run because the market's been hit quite hard. I think next year is going to be the real recovery plays. And obviously, Rolls Royce sort of has a chain effect essentially because it's in so many areas of industries.
Yeah. So, what are we watching for Rolls Royce? We're definitely watching for next year, right? We're not going to be doing anything for this year.
Well, we're in obviously such a good price that we're definitely holding it. But for me, it's COVID's going to be the main one, as they've got all these, this new contract and so on. So I think it's that reoccurring revenue for Rolls Royce. Yeah. And that's obviously a lot of it's in planes and so on. And that's obviously going to improve that balance sheet.
Yeah. Yeah. We saw the effect of COVID today. Obviously, we've had a lot of news over the weekend about rising COVID cases. Then it came out today about Parliament sort of going to a similar sort of lockdown.
So that plan B?
Yeah, so there's a lot of uncertainty what that will mean for air travel. So obviously they've had a red day today about I think 4% or 5%, but that's sort of the way it is when you're playing stocks which are rebounding due to COVID, whilst COVID is still going on.
The reality is everyone who wanted to be jabbed has now had the opportunity. So the people that aren't, most of them anyway, aren't going to get jabbed. So it's something you're going to have to live with. And I think whether that's government or the companies are going to slowly change. I know New Zealand's have been struggling quite a bit. And same with Australia, with it essentially being like a prison. But it just seems like they're realizing that you can't force people, and it is something like the flu. Obviously, it's a little bit worse than that, but there's only so much you can do.
Yeah. No, well, I'm pretty sure that's a good way to conclude our Rolls Royce update. If you got any plans on how you're going to play Rolls Royce, please drop them in the comments, or if you've got any questions, please put them in the comments and we'll do our best to get back to you. Thanks, guys.